Hi guys, thanks for joining in and let's start. Rajshri, you would like to take on?
Yeah. So, good afternoon, everybody. I welcome you all to the Affordable Robotics and Automation Limited Q2 and H1 FY21 conference call. Today, we have joined with Mr. Milind Padole, the promoter and managing director of the company, taking the company to the next level. He has got over 2 decades of the experience, and he mainly looks after the R&D and the new product testing. Along with him, we are also joined with Mr. Rahul Padole, who is an executive director and looks after the marketing division, brand marketing strategies, and outreach to the company. We also have the CFO, Mr. Dakshinamurthy Kalidas, who is the CFO of the company. Initially, we all will be in the listen-only mode, and then there will be opportunity for all of you to have a question and answer session with the management. So now I'm requesting Mr. Milind Padole to take us to the opening speech of the call, and post that Mr. Murthy will take us for the financial performance presentation. Over to you, sir.
Thank you. Thank you all for joining in today and uh, thanks for all your support through our thick and thin. So we have been, as you know, we have been continuously in the process of optimizing the cost, optimizing the operational efficiency. This year, the whole focus was to reduce the cost, re-engineer, and use different material to reduce the primarily the cost factor, right? Both operational and the material costs. So that was our primary focus. Also, on the other side, our focus is on various product developments in all the three verticals, all the two verticals, welding automation and warehouse automation. In car parking, our focus is to enter into different geography this year and next year also. Welding automation, we are entering into heavy welding this year and also trying to enter railway welding, and construction equipment. So these are some of the focus areas. Also, we have done a joint venture, a JV thing to enter into uh, a category of welding, where ARAPL was not there. So that is the focus. Car parking, we have started rather Pune, Nagpur this year, and we will be starting some more geographies next year. Uh, so that was the two verticals in ARAPL. Also, we have reduced a lot of cost in material, lot of cost, in operations. So what we have tried to do is, since due to cyclic nature of our business, we have tried to reduce our fixed cost, and whenever the order increases, we will have temporary manpower or the vendors. So we'll engage with the vendors. So that is how we have reduced the cost. As far as warehouse automation is concerned, um, we have been developing product for last couple of years, and this year we have seen huge traction from a lot of marquee customers, um, like GXO or FedEx, or Merck or DHL. So these are the few and Target. So these are the few customers we have got very good response and traction in US. You will see, revenue also, considerable revenue this year through these products, and so that is how it is. Uh, that's all. And you know, so our focus is going to be drastic increase in warehouse automation sales in US, because the same customers whom we were engaged with POC, last couple of months, have given us smaller orders like 5 robots or 6 robots or 10 robots order. and the same customers are expected to give huge orders next year, and we can expect, huge growth in subsidiary in the following year, and that is what we are expected to do. So over to you, Murthy. We can have a structured, presentation for this.
Yeah. Yeah. Good evening, everyone. Thanks for the time and joining with us on this earning call. So I will start with the presentations. Overall company overview, ARPL deals with the fixed robotic solutions. As you all know, we are the first robotic company to get listed in the Indian stock exchanges. And 20 years since the inception, we have state-of-art facility covering.
So, Murthy, I will take up this sheet. So, if you see, the whole concept. So, we have a company ARAPL which is listed, which is into welding automation and automated parking, right? So, that is fixed robotics. And then we have a subsidiary ARAPL RAS, where ARAPL holds 83%. The brand name is Humro. That is into mobile robotics. So anything which is mobile is going to, come in ARAPL RAS, and whatever is fixed is going to prima facie come in ARAPL. So that is a broader, division of how these two companies look like. Then we have 5 plants in Pune. One is for car parking, 2 plants are for welding automation, and 2 are for RAS. So that is how it is. So that's all pretty much here, right? Yeah, you can go to the next slide. So this is our journey. We started 2005 as a proprietary company by the name Global Sourcing, which got merged into private limited. 2010 we started private limited and merged that, right? So 2010 Global Sourcing actually became a private limited company called ARAPL, and a lot of milestones in between. We started sales and service office in Shanghai in 2016. We got listed 2018, 2021. We started our subsidiary, and then last year we migrated to main board. And 2025 we actually launched our pallet handling robots. So earlier, we launched bin handling robots, but then we pivoted and launched pallet handling robots, and which we have seen a lot of success now. So broadly, these are the 3 verticals, right? So first 2 verticals are fixed robots. The robot which are fixed to the ground comes under ARPL. And so if you see welding automation is a project business, or what you can call as customized solution product business, project business. So project to project, it is different, and a lot of customization. So our whole thought is towards moving towards product business. So car parking is 80% product and 20% customization, like depending on the building. The third vertical, which is export oriented, is completely product business. There is no customization. There is only software customization in that. Yeah. So these are few customers. We have, Tata, Mahindra, Bajaj, Piaggio, Eicher, Volvo. Are few of our repeat customers. Then tier 1 are Cosma Magna, Badwe, SK Tech are few of the, again, repeat customers. Then on the real estate, we have Lodha, Ruparel, Visakhapatnam Smart City as some of our, Rustamji as our customers. On Humro, we have customers like GXO, State, Apple, HP, and the list is long now. We are in talks with very big customers like Merckx, FedEx, DHL, UPS, so that's how it is. Yeah, next.
Yeah. So now comes the financial performance.
Yeah.
So on financial performance front, on standalone quarter on quarter, This year we did around 26 crore. This quarter, September quarter, we did around 26 crore. Earlier June quarter was 19 crore, and the same last year Q2 was around 22. So we continued the growth momentum there on the turnover. The turnaround here is the EBITDA, as the initial itself, Mr. Philip Barole has told that this year our focus is more on the cost optimization and profit to increase the profit at the profit level to see the increase. So this year we turned H1 itself into profit. EBITDA margin for Q2 alone was around 23%, and PBT is around 4.38 crores, which was last quarter in 3.6 crore was on the negative side, and the last year at the same Q2 was 3.17 negative side. At PAT, we did around 4.18 crore. Last quarter it is 3.6 crore on negative, and last year the same Q2 was around 3.17 negative. So this year we did the major turnaround. 2-3 factors are there here. As we mentioned, we did some cost optimization on the cost of the material by using the design optimization, and some cost negotiations and all happened there. Then fixed cost, as the cyclic, our business is a cyclic. So in this year, the Q2 on the employee cost and all, we reduced some fixed expenses. So we wanted to keep that on the variable basis. So whenever the demand increases, we will increase that cost. As of now, the cost reduced, so that profitability also increased here. And then the third factor is we got some of the integration business in H1. So due to that, the profitability was higher there. And on standalone H1 basis, if we see, we closed around 44.5 crore total income. Previous year it was around 41, and previous financial year it is 160. So from 41 last H1 2 we moved to 160. So this year also we have growth there. We did around 45. So we will be targeting at the same growth momentum for the next year also. And again here the EBITDA is around 3.95 crores. Last year it was at the same time it was 5.25 crores on the negative. Year end we closed around 14.39. So EBITDA margin is a pretty good here, 9%. So last, which we achieved in the financial year end, that the same EBITDA margin we achieved in H1 itself. So profit PAT also on the positive side this year, 58 lakh, which was on the same last year around 8 crore negative. This is on consolidated basis. In consolidated, we had additional revenue of RAS around 2 to 3 crores in this H1. So this added to here. So total income on standalone basis quarter on quarter Q2 increased to 29.56, which was at the same last year was 24.69, and last quarter it was around 19. EBITDA is 6.26 crore from last quarter of 2 crore on negative sides. EBITDA we closed at the positive of 6.26. The same last year Q2 was around 3.43 on the negative side. PBT on PAT portion 4.56. We closed this September quarter end was 3.68 negative. At the same time last year the Q2 was around 4.82 crores on the negative side. So here as standalone major contribution here was from the standalone basis. So ARPL business we did the profitability there. So that's added to this. On Concall basis, H1 we did 48.43 versus 43.95 last year, and EBITDA 4.29 this year versus 9.54 on the negative last year. PAT we moved on the positive side 87 lakhs, whereas last year it was around 12.28 crore on negative. On operational highlights in ARPL till September. When the history of ARPL, we have achieved a milestone of staying profitable in H1 of the year. This was mainly driven by strong operational efficiency and improved contribution from the core business segments. And on order front, new customer acquisition is there in H1. We received around 40 crores of new orders from the new customers, which is almost 40% of the new orders we booked in H1 FY2026. On car parking segment, as we informed, we moved to the different geographical expansions also we did this year with the new corporate level clients. and our continuous investment in deep tech innovation is there. In-house vehicle and motor controllers we developed already in-house. So for that, we have means further development activity is there. Then on for Raj Sumro, we have already declared this ENFL board has approved for the proposal of new investment around 80 crores into the subsidiary of ENFL Trans Private Limited. As a part of the plant, our company promoter Mr. Milind Purale has already given an interest-free loan of around 26 crore. This is with a provision to convert this into equity or warrants at the later date. ENFL Trans has rebranded as Umru, which is derived from as a human plus robot. The brand embodies the company's vision of collaborative automation and where the human and robots work seamlessly together to enhance safety, productivity, and efficiency. So far, we shipped 20 robots to USA from that already 6 units integration started from this October. And there is an healthy sales pipeline is there in Hondo and with the improvement on profitability. Order booking status as of September end, we have this is the order booking status of September end. Welding automation, we had 33 crores, 32.59 crores order booking at the opening. So new 56 crores we booked, from which we deliver around 30.56. So closings as of September, we have around 58 crores order booking in welding automation. Car parking, we have around 58. So warehouse automation, we have around this 26 crores order in hand. So with the opening, we started this year with 57 crores. H1 we booked another 105 crores this year and delivered 43. So we have another 140 crores which will be delivered before this year end. So for the year ends deliveries, all the orders we have in hand. So whatever further new orders we are booking, some might be spilled to the next financial year and some deliveries we might do before this year itself. Yeah, so that's it from the presentation points. Now we can start our Q&A sessions. You can drop your questions on chat or raise your hands to ask the question.
Yes. So whoever has a question, I request to raise a hand. In case you're not able to do it, you can type the question in the chat box too. We are taking the first question from Mr. Tushar Khurana. Kindly unmute yourself and go ahead. So we can close on the presentation. Mr. Tushar Khurana, please go ahead. Mr. Tushar Khurana, please unmute yourself and go ahead. Mr. Tushar, can you hear me? Meanwhile, I'll take the next.
Yes. Hello.
Yes. Yeah, Tushar, please go ahead.
Yeah, I just got the option to unmute. Yeah. Hi. Sir, can you just explain to me, given the total order book that you've just shown, we are at 140 crore of order book currently, which we expect to complete by this year end. So can we also expect more orders flowing in, and that would also lead to further increase in our top line for this financial year vis-a-vis last year, or would we be at the same run rate this financial year as well? Maybe with better margins because of the optimizations that you're suggesting we are doing on the cost saving side. So that is my first question. I'm not able to hear. Hello?
Sorry. So
Yes.
generally, the orders which we have booked, in the tail end, we are not able to deliver because, the delivery time itself is 3 months, 4 months, and 5 months sometime. So, so probably, another 10 to 15 days, whatever orders will be booked by mid of November, we would be able to deliver before March, and post all that will get spilled over. Tentatively.
And how do you see the margins for this financial year if you've done some optimizations on your end on the cost saving side? So what kind of margins can we expect in this financial year?
So definitely I can't tell you the numbers, but definitely it's going to improve, right? So all these years, H1, we were in the loss, like 6-7 crores, like which we have made profit. and year end is going to end the same way. So definitely, the math is very simple. So that is what we expect.
Okay. And sir, can you explain this rationale for this 80 CR investment that we are doing in our subsidiary? So is it for the capacity expansion that we are doing, or if you could elaborate more on that?
Most of it is for the customer acquisition, and part of it, like 1 million, 8 to 9 crores will go into the product sharpening or the product development, right? And rest 2 million, close to 2 million to 3 million will go into inventory, and 2 to 3 million is like 24 crores or 25 crores will go into the inventory, and then part of it is contingency, and rest is the market acquisition cost, the marketing cost, and the OPEX cost of US and part of India.
Okay. And sir, what is our mix between domestic and export order book right now?
So the third vertical is completely export, and the first two vertical are completely indigenous, right?
Welding
So,
automation
sir,
and woodworking is completely indigenous. Umro is the completely export oriented.
so this warehouse automation, are we also focusing in India for this?
For the Humro,
Yes, yes, where we do this
no.
warehousing automation.
So
And any
so
particular
where
reason we're not doing it?
So warehouse automation, there are a lot of reasons, and we depth. It's a very long answer, but I will try to answer in short. The which we are selling, and it is like 100 to 120,000. The cost arbitrage of the labor to this product is not, will not never justify that kind of
Okay.
product here in India. Uh, Obviously, there are different kind of products which will be, useful in India, but we cannot manufacture the whole, things. So we are focused on 3 or 4 SKUs, which has a market in US and Europe. So at the moment, we are focused in US and largely in California. Uh, Given a choice to me, I will only focus in California. California itself is a 5 trillion economy, and so that market itself is a very big market, but the existing customers like have at different locations, so we have to go to different locations also. Otherwise, given a choice, we are trying to focus only in California state.
Okay, my last question now, sir, is what is the total revenue that we can get at with our current capacity at full scale?
So full scale, we have a capacity of around 250 to 300 robots annually.
Okay, and where can this take our revenues to?
So close to
30,
uh,
30 million, 30, 35 million.
yeah, 30 million, 30 to 40 million.
Okay, okay, okay. That's very helpful, sir. Thank you and all the
Thank you.
best.
Thanks.
Yeah,
Thanks,
I
Tushar.
will take the next question from the cursor, but just reminder to all the participants, as there is a long queue for all the questions. I request to restrict yourself for the first 2 questions and then join back the queue once again. Cursor, please go ahead.
Yeah, thank you. So I have 2 questions. The first question, I'll just list out both my questions so that you can answer. So the first question is my understanding correct that the promoter selling that's happening in the open market is going to be, in a sense, reinvested into the subsidiary which you're raising funds? So is that the reason why you've sold in the open market? If that's not the reason, could you give the reason? So that's the first question. And the second question is, in this subsidiary, the ARAPL subsidiary, we are not 100% shareholders. So who are the other key shareholders? Could you please disclose that? Because I couldn't find that in the public forum. Thank you.
Okay. So let me answer the simpler one, the second one. So in the RAS, the holding is 83% is by the ARAPL, which is listed entity. Then the 10 to 12% is Mr. Vijay Kedia ji, and rest is the ESOP pool and co-founders. Okay. So that is a simpler answer, and I am sure this market cap should be there in the public domain. If not, I will check and get it done. Murthy, just can you note it down? Why this is not in public domain? It has to be there in the public domain, right? So I will check. Rishil. No, this question is Saurabh question, kya?
Yeah,
Yes.
so this question.
Kaustubh.
Whose question? Rishil.
Kaustubh.
Kaustubh. Okay. And the first question. So we expect to raise around $8 to $10 million, right? And out of which, so there was some urgent requirement in the subsidiary. So I have, decided to sell my stake, not in the open market, but to the HNIs in the open market. So we have reached out to some HNIs, and in the market rate, we have sold those shares, which I have given as an interest-free loan to the company, ARAPL, which will get converted into the equity whenever that restriction period gets over. So once I sell, I have a restriction. I cannot convert my equity for next 6 months. So once it is over, it will again be get converted on the floor value. And till that time, it is an interest-free loan I have given because there were some urgent orders to be delivered in the subsidiary RAS.
Thank you so much. Just last, if you can share the HNI you sold to, if you can't, it's fine.
So that is there available in the public, Murthy. It's in Bencos.
Quarterly compliance. Quarterly they can refer the quarterly shareholding patterns.
Yeah.
Then they can see that.
It will be there.
Thank you, Kaustubh.
Thank you. Thank you.
Yeah, in case if you have any more questions, please join by the queue. I'm taking the next question from Mr. Darshan Garg. Please go ahead. Kindly unmute yourself.
Hello, thank you for the opportunity. So, sir, I have a question like, what is our go-to-market strategy? Like, how are we going to make this scalable in US and other export markets, which are highly competitive from global peers?
Okay, so Darshan, as far as autonomous forklifts are concerned, it is 5% penetration in the market, and I can share you, or you can search online. So prima facie, we think US warehouses are completely automated. It's not. 95% of the warehouses are all manual. And so autonomous forklifts, we are ahead of the curve, we are ahead of the time. If you see India, we are the only company who has made autonomous forklifts, which goes till 32 feet, okay, and launched in US, and got a lot of traction. The only fact I can tell you is, the kind of traction we are getting from FedEx or Merck or, GXO, Target, UPS and DHL, that itself talks volume, right? If it would have been a lot of competition, such big people would never have even, answered my call. So competitive, cost competitive, as we are ahead of time, we are good. We are still competitive. Definitely there will be price deflection. There will be price war 3 years, 4 years down the line as this product matures. But we are getting ready for that price war also, and we have the plan ready for the price deflection. How we are going to reduce our price in next 3 years, 4 years to a level which I can't disclose, obviously, what is our strategy. But yes, we are planning very aggressively to, for that price war to come in next 3 to 4 or 5 years or 6 years, right?
So, sir, are we planning for any more partnerships with the US firms or to cater those markets? Like we have done before
It's
with
a
the
continuous journey,
Toyota
right,
forklifts.
Darshan? It is a continuous journey. As of now, we have 2 partners, and coming quarter or next quarter, you will see a full-fledged person on board just to get these partnerships, right? So we will get a lot of partners, and once we reach a particular volume, what we are saying in FY27, we will have a lot of partners in other geographies of Europe too. Yes, the GTM is to go through dealers and partners, if that is the question. Yeah, yes.
Okay, that answers my question. I will get back to the queue. Thank you.
Sure.
Thank you, Darshan. Prayer Gandhi, please post forward your question.
Yeah. Hello, sir, and congratulations for becoming profitable. So
Thank
I
you.
just
Thank
wanted
you.
to ask that what are the individual margins for all the three segments? If you can throw some light on that.
Yeah. So
Okay.
automation, we earlier also we have mentioned in some calls. So in automation, we have around 35% gross margin levels there, and car parking we have around 20-25%. So some improvements we are doing in this year on that. This third vertical will get the higher margins of gross at the gross level. It will be around 40-50%.
Okay. And sir, just one more question. That with respect to how are we seeing the expansion in Europe and Brazil? I think you mentioned previously that once the US, the US revenue reaches a certain level, we might, explore Europe and Brazil markets as well. So where are we with respect to that?
So, not Brazil for sure now, but Europe, yes. So, first we will expand the geography in US itself. As I said, so if you see the geography of US, there are two big ports. One is in LA and one is in, New York. So we are close to LA. We are happy in California. It's a huge business. So the second, natural progression will be to go towards New York port. So if you see strategically, we have two dealers, one from Pennsylvania, which is closer to New York port, and second is in Ontario, which is closer to LA port. So we have two dealers in the place for the two region, but our more focus is towards this region now. So definitely we will first grow in US and then English speaking countries in Europe and Canada. So that is the next, and definitely we are looking for dealers. We have a marketing guy responsible for Europe who is, working, meeting a lot of people, but when the time comes, we will start, because Europe also have some different kind of certifications which we are making ready for those certifications. Everything requires cost, money, right? So we are prioritizing our funds. So definitely once we reach profitability at certain level, that certification will trigger for Europe, and then the dealer will come in for the Europe.
Okay. And sir, one bookkeeping question. With respect to the earlier commentary, you mentioned that there was a fixed cost which you opted to go variable. So can you just highlight which particular cost was you opted to convert it from fixed to variable? Which helped us.
So, okay. So when you make welding automation or, for example, welding automation will take. So it's a product business, right? It's a customization business and a project business, right? It is not a product business, it's a project business. So there is a lot of cyclic load, right, in that business. And there are a lot of domain experts required for everything: electrical, electronic, mechanical, simulation, and stuff like that. I can go on telling different. So we have reduced and found a mean where we thought we will keep this, and then the months which we know historically that there is a spike, we will get people or vendor for that. So every department, be it robo teaching, be it PLC programming, be it design, material handling design, everywhere we have reduced the. So earlier we were having manpower for the peak. Now we have manpower for the peak minus a delta, right? So that is what we have tried to do.
Okay.
Mr.
Thank you,
Gandhi, I
sir.
request you to join by the queue as there are a couple of participants already
Yeah.
wanted to ask a
Sure.
question.
I'll join the queue. Thank you.
Thanks.
Yeah, thank you so much. Once again, I request all the participants to restrict themselves for the first two questions and please join by the queue. I'm taking the question in the chat box from Mr. Raj Shah. So, Mr. Milind sir, he wanted to ask, please explain the business model of Hamro. If pay per use, then who will finance it? What will be the structure?
So we have all models. It is not pay-per-use first. That model is still not launched, but we have RAS model. RAS, when we say, is lease to own or uh, the fixed lease. Okay. So lease to own has slightly lease to own and lease is slightly different. Lease to own, you own after 3 years, and in the lease you don't own. So lease to own, the installment is slightly higher, and then the third model is the capex. You can go ahead and buy. So these are the three models. Pay as you use. We have still not launched, though we keep on marketing, but we have not given to any customer. So so if it is 3 years and more contract, we have a banker and financier who finance this. If it is less than 3 year contract, we have to finance ourselves. As of now, we are searching bankers for that as well. As our operations we get older, our credibility and credit rating increases in US, we will get banker for lesser tenure also.
His next question is that 26 crore of the loan which Milind sir had already put it in the RAS or the ARAPL. So, and in which company the conversion to the equity will happen?
So as of now, we have kept it open. Either ARAPL or RAS, both are open. So we will take advice from all the big investors, and whatever is beneficial for the larger investor, we will do that.
Regulatory will be also.
And regulatory also, yes.
Yes.
Yeah. I request Vijay Pandey, please ask your question. Unmute yourself and please go ahead.
Hi, sir. Thank you for taking my question, Vijay Pandey from Nuvama.
Vijay, you are from?
Nuvama.
Oh, hi, Vijay. How are you?
Hi, sir. Hi. So,
Okay. I thought
we'll,
you, but
yeah,
your camera was off, right?
we'll meet next week. So,
Sure,
couple of
Vijay.
questions. So,
You still have questions? Okay.
one was the follow-up. So, you said that we have two dealers in US. Both are in California, or one is in
No, one in
California,
California and one in Pennsylvania.
and so that one dealer can cover entire California, or we'll need other dealers also?
So no, so we are in active discussion with one more dealer in California. So
Okay.
as of now, the POC queue is 4 months. We are not able to do POC, so we are not looking for any new orders. The same POC getting converted is good enough. So we are going slow but steady, and once we make that base, we know these are the huge customers. We can't uh, miss those customers. So as of now,
Okay.
our question is not about the orders. We have to complete the POCs and get the orders. So everybody is ready to give the orders after the POC, right? So the POCs are free of cost, and now we have started charging for POC. So once we complete the POC, there are a lot of orders which are following up now.
Okay, sir. The second was on the Rubro. So, what I understand from the previous participant question, that currently the model are leased to own, or it's leased. So how do we?
No, so it is all the three, right, Vijay? It is capex also, it is lease to own also, and lease also. So all the three. But see, I'll tell you, in a developed market like US, selling a forklift is not something new. It is an established way of selling, right? So I can't go and change that thing. So it is like age-old method of selling a forklift. So be it autonomous also, be it electric or autonomous, the method is fixed, right? So if it is a OEM, they are going to buy. If it is like 3PL, they are going to lease. More or less,
So,
that is the culture.
I just wanted to check in terms of, consider if a company buys a forklift of $100,000.
Mhm.
So in case if it's a direct purchase, then we record a revenue of $100,000. But if it's a leased one, so we record it in period of 3 years or 6 years. Like, how do we record it, that revenue?
Yeah, monthly.
So See, if the contract is for 2 years or 3 years, so it's a monthly revenue, which is like you'll get.
Okay, okay, okay. And lastly, sir, when we say that our 141 crores of order that is expected to be delivered by Q4, so we may get further orders over next 3 to 6 months. That will be also part of
That
FY26
will
or
keep on spilling over, no? So because there is a
okay.
delivery time also, right?
So how much time is between, consider if I
So
get an
mostly,
order in
mota moti,
November.
if by November 15th we will be able to accommodate, or November 20th or more or less that,
Okay,
approximately. Beyond that,
okay,
it will all spill over.
okay, 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 sir. Thank you, and we'll meet you next week.
And our next 4 months is like overpacked. We can't take, a single order as of now. So it is completely packed. So I don't
Sure,
think we'll be able to take any further order in this year now. It will all spill over.
Hi, sir.
sure.
Mr.
I will
Pavan,
met.
yeah, Mr. Pavan Kumar.
Hi, thank you for taking my question.
Thanks.
Yes, so I have a couple of questions.
I request you to first restrict yourself for the first two questions and then be joined by the key.
Yeah, sure, no problem. Mirinji, we had a discussion earlier on launching our own controllers and batteries and that thing in last call. What is the progress on that part?
So we have our own vehicle controller now, okay, and batteries. We are not making our own batteries, but we will be making batteries with our own design, okay. So, but that is still secondary. So the first one was vehicle controller, which we have made, and then we have localized a lot of components to reduce the cost, and we have achieved some. And by Jan to Feb, we plan to achieve some more cost reduction in the robot cost. So yes,
Okay.
vehicle controller we have already developed.
My second next question is, we discussed in the last call that we are going to make an automated factory and we are in discussion of purchasing some land for that. Do we have some progress on that?
So as of now, unless we reach a certain number, probably FY27 till FY27, we will not spend any capex. Whatever fund is there, we will only spend to acquire customers and a little bit in product development, because product development cycle is also.
Hello.
Yeah, I think his line is hung. We'll just wait back.
That's I thought of my line is drops.
More or less the product development is over.
Sir, we lost you for the last 3 seconds. So can you please repeat?
Oh, sorry. So I said most of the fund we will be using in customer acquisition and a little bit in the product development, because product development cycle is also almost over except for the cost optimization part of it. Land and manufacturing we will only do after FY27 results. So till that time, no spending on the capex.
Okay, so does that mean that we have enough capacity to serve whatever orders we are going to get in next 1 year, for example?
Yes. So we have made.
Okay, yeah, that makes sense.
Yeah,
I just wondering because we had that discussion earlier, so
yes,
I have that thing. Okay. What is the total debt level of the company, long term and short term both? If somebody can put the number maybe in the chat, that is also okay.
It's both combined around console level, we have around 55 crores.
Okay, 55 years total. And you were saying that we have gone into a joint venture for heavy welding in the beginning of the call. If you can share some more light on that, like who is the other partner?
No, so I said we will be going in the joint venture. So we will be declaring probably, in some time. We are searching joint venture partner for everything, right from heavy welding. So you will see, a declaration very soon probably about the joint venture.
Okay, that's fine.
Yeah.
And what is our total team
Sorry,
size?
please
Just
let's
yeah.
keep it to two questions.
Okay, sure. I'll join back. No problem.
Next, I'm taking Mr. Ketan. Ketan, please go ahead. Mr. Ketan. Once again, a reminder to please restrict yourself for the first two questions.
Am I audible now?
Yes, clear.
Yeah. Sir, my question is, we are in the need of a lot of funds to keep our operations going on. We have, Mr. Millen, you've sold your stake to put money in the subsidiary. Um, my question is pointed towards the purchase of a Mercedes Benz that we did in the company. The company is paying an installment and also the interest cost on that one. So could you please throw some light and kind of help me understand like how do we justify the expenses when we are kind of
Okay, understood question, Ketan. So when we are doing, targeting 300 crores, we need a car for customers or visitors or investors. And the old car is like 10 years old, which is like almost, so there was a new car requirement and that was bought, right?
Okay, okay, fair enough. And my other question is, just a clarification, because there's some confusion in my head regarding the order book numbers and all. So last year, we had an order book of about $4 million that we had received for the robotic warehouse automation. And we started shipping robots from Q4 of 25, and we did it in Q1 as well. But in these two quarters, we did not book any revenue. And now in Q2, we booked some revenue. So whatever revenue we booked in Q2 of 26, is that part of the older order book or and the shipments that happened in Q4 and Q1, were they for POCs or for the orders?
So the first, the first order what we got, we had to prove some use cases, right? So the robo is proved in our experience zone, but when it is actually deployed, say in 800,000 square feet or 900,000 square feet, there are a lot of variations which we cannot do in testing of 10,000 square feet, right? So we have to prove that in the first case. So 4 to 5 robots were in for the POC, but the rest of is there for commercial sale. But we have to prove those. And the order which we had received, right, 3 million, not 4 million, 3 million order, what we had received was for 90 days credit. And, we were not able to give him the credit at that time. So yes, so wherever, so there are two dealers and there are a lot of orders which come directly to us. So whichever order is coming directly to us, if it is, it can be converted into upfront sale, we are going to give it to that dealer. Okay. So the question is, yes, this order which we have received is directly to us. We can route it through a dealer. In that 4 million also, we have an option to route it if he pays us upfront money.
Thanks, Ketan. I'm taking the next question from Mr. Rishil. Mr. Rishil?
Yeah. Hello, sir. Sir, you mentioned for the previous question that there are few companies who are showing a lot of interest in our products. Like, if it is materialized, what can be the order size and like with the current capacity, can we fulfill the order or should we raise the further funding?
So, it's quite complex question. I can't answer a lot of things. So, you can map our competitor landscape, like, I can give you the competitor landscape, like Vision Nav is our one of the closest, competitor. So you can see how much fund they raised for what, and probably we might require that or not. Time will tell how efficiently we run. So that is point number one. Point number two, the customers which we are, reaching now, they have like somewhere 100 warehouses to 500 warehouses. Like GXO has 500 warehouses, and Merck's and all have 100 warehouses, right? And similarly, FedEx and others, right? So they have huge potential. Every warehouse, if go completely automated, can have like 40 to 50 robots. If go completely automated, right? But everybody is going to do stage-wise automation. So yes, as I said, warehouse autonomous is just 5% penetration. So there is a lot of headroom there available. Uh, how how much we can chew or how much we can deliver, it's onto us, and on our product. So we are focused on our product quality and our tech quality. So yes, as of now, we have to prove in the smaller numbers, and then we will go full-fledged.
So my second question is like, since we are a small company and struggling to fund the R&D, so like if you see in US there are like a lot of companies with like potentially billions of dollars in funding. So how can we compete with those kind of companies with like unlimited amount of money for R&D and all?
So Rishil, we are from India, right? So we know how to be frugal. And if you see our journey, so first thing is our R&D thing is almost over. Our products are developed, launched. We have started getting. It is only the journey of reducing the cost further. So the point number one. Point number two, if you see our journey, we have developed the product, launched in US, and started getting orders in just 10 million, okay, or less than 10 million, 7 million probably. So if you see my peer, they have raised 70 million or 80 million to reach this level. So that is how we are, right? So we know we are coming from India, we have limited funds, so we have to live with that. The fortunate part is a lot of engineers, tech engineers, our costs are very cheap. English speaking, very good tech engineers are available at a low cost. So that is our strength also, right? So that's all. We can just fight on our strength, not on our weakness, Rachel. That is what I can tell you.
Yeah,
But
I have
yes,
one like a small follow-up question. Like, are we having any plan to find a like a domain expert in this, so that we can lead it like on competitive basis?
domain expert in what?
In the same domain, like the products which we are building. Like, is there any plan to uh,
No,
get
we have
some domain
enough domain
expert
expertise
who's
as
technical?
enough domain expertise for product, and we have developed product. We have understood the product gap. So there we are good, right? Obviously, finance, as you said, the kind of finance US tech companies can attract, whether the deep tech companies in India can attract that, right? So that is obviously my day-to-day strength, my fight, right? So yes, with this good customers and traction, there are a lot of US companies who have shown interest to fund. The time will tell, and obviously, yes, there are a lot of good tech funding happening in US than in India. India will also reach that level where they will start honoring the deep tech companies. But yes, there we are.
Yeah. Okay,
Thanks,
thank you.
Rachel.
Thanks.
I'll take the next question from Mr. Arya Shah.
Hey, hi, thanks for the opportunity. So I have two questions. So one, how many proof of concept Humro robots are there in US, and how many clients like have them, and what is the expected like the revenue in next 1 or 2 years from them? And then I'll take my second question.
Okay, the first question itself is big. So, okay, we have close to I think 30 robos there in US, out of which we are using 4 to 5 or 6 robos for POCs, if that was the question. And the second question is how many POCs we have completed, right? So we must have completed around 6 to 7 POCs. And so these customers, one of the big customers where we have completed, two of the big customers we have completed. One is Target and second is Target 3PL, and second is GXO. So GXO has 500 warehouses, right? So the potential of GXO itself is so the potential is huge. How much we can do, we will get, depends on a lot of things. And Target itself has around 100 warehouses probably. Yeah. So both are big. Rest are smaller. Like one of the logistic company is like having 12 warehouses. So each warehouses will have around 30 to 40 to 50 robots, and they will go stage wise. Nobody's going to change everything in 1 year. So they will change 10 or 15 first year, then 20, and then 30, something like that.
Any expected revenue, like the last part of the question, expected revenue in like by FY26, because to 26, I think we are done with 140, 27, 28.
So the question FY26, if it is, so as Murthy has said, right, 25 to 26 crores we are targeting. And FY27, again, we are targeting quite big number. I don't know whether I'm allowed to tell the numbers, but yes, quite. We are expecting a J curve from there. Yeah.
Exponential growth will be there from.
Okay, so my second question is, so we have 40 crore intangible assets approximately. So is the amount still going to go up, or we'll start expensing it now? Because the product development, I think, is done now. So
This is so far, I think by earlier presentations also we have mentioned, we have developed around IPs there in India, right? Around 6 patents we have filed there. And now the 2 more patents are getting filed in the US. It's in the process. So this cost may be around, us said very little part will increase in future for the product development, but most of the product development happened already.
so then this 40 crore will start expensing it from the next year, or what? It will still be capitalized in the books.
But yeah, from next financial year we will amortize this.
Okay, thank you.
Thank you. I take the next question from Akshay Shah.
Thanks for opportunity. Sir, I am new to the business. So first of all, I want to understand that Q1Q or H1H, we have degrown. So what was the reason for the same?
No, there is a growth. It's not degrowth. From last year, from 41 to this year, we did H1 of around 45. So growth is there. It's not degrowth.
Okay. And sir, in terms of capabilities, are we in par with China in terms of cost and technology both?
As of
Yes.
now, yeah, is that.
Okay. And one order you got from Apple. So what kind of order it is? And what is your technological capabilities in that?
So it is all mobile robots, right? So it is all material movement from position A to position B for the warehouse.
Okay. Thank you so much.
Saurabh Pandey, please. Saurabh Pandey, you can go ahead with your question. Meanwhile, he has also put in a chart. So what is the company's growth plan in the next 10 years? Sir, there's a question from Saurabh.
Yeah, so we want to be a $1 billion valuation company in next 4 to 5 years. That is what is we are targeting and we are working towards.
Okay. We have next question from Mr. Pankaj Bobade. He says the standard entity is making a profit while console entity is losing, loss making. So what is leading to the loss at consolidated level, and how long do you expect the loss to continue?
So, Concall level, since last 2 years, we were doing the developments and all, right? Now it's the time to see the fruit of the development. So revenues already started from in a subsidiary. So console is started on the profit side. It's already the journey started off.
There's a question from Mr. Jogesh Mita. Do we have any recurring revenue stream in Hamro even when there is one-time sale to the customer?
Yeah, it is there. The subscription, software subscription cost will be there, which will be the recurring in the nature.
Okay. Mr. Vijay Pandey wanted to know what is our FY26 target for sale and EBITDA?
Means it is a better than last year itself. We can say that don't numbers. I don't means I don't know whether the numbers could be the right words or not, but it will be better. Of course, it will be better from the last year.
Okay. Mr. Jogesh Mita wanted to know of the three products, does Hamro have the maximum potential in terms of the revenue? Which product has the maximum potential?
So,
Yeah.
all these two business will grow the welding automation and the parking. We expect to grow by 17 to 18% or 20% CAGR. The Humro can see a J curve because that's a product business. Yeah.
Question from Mr. Aizaz. He wanted to know how many patents we have, how much percentage of revenue goes to R&D.
So we have filed 6 patents in India, got one, filing 2 more patents in US. Last 2 years we have been spending almost a lot of money in R&D. So figures, Murthy, can you tell how much we have spent in R&D?
Yeah, around 25 to 30 we spent on R&D and separate on product development means and business acquisitions and all are another around 14 15 crores. So total 45 to 50 crores.
R&D itself, how much we have
R&D
spent?
itself is around 25.
Yeah, and now I request Mr. Athar Syed to go ahead with his question. Mr. Athar Syed. Mr. Syed.
I think Syed has posted also how much
Yeah.
order.
The order pipeline.
Yeah.
So that's 141 crores right now.
So 140 we have mentioned there in the confirm orders we have in hand. So ordering pipeline is huge.
Okay. Mr. Prerak, go ahead with your question.
Yes, thank you, sir, for taking my question again. So, sir, with respect to the automated car parking, I remember in the balance sheet you mentioned that you are trying to double the revenue for this particular segment for the next 3 to 4 years. So, can you just provide in the presentation as well as segmental bifurcation for the top line and the bottom line? Because I have gone through the different presentations, but we don't have segmental bifurcations.
Yeah, so if we see last financial year, we closed around 30% from the total revenue of 30% from car parking and 70% is from the other segments of automations. So that will continue. So gradually from this year, you could see 30 will move to 40%.
Okay. And sir, just one last question on the product differentiation side. With respect to the forklifts, you mentioned in India, you were the only one to have 32 feet, long forklift. So where does it put us on the map in comparison to the global peers? Like in terms of product, how does a product stand apart from our competitors?
Sir?
Sorry?
So, like the 32 feet, we mentioned the autonomous forklift. We are the one from the India who is manufacturing this as of now. In the competitors, we can see at global level, there are multiple, means another 1 or 2 competitors are there. But we don't know that 32 feet anyone has developed. They have around 24 or 22, something like that. It is there.
Okay. Thank you, sir. All the best.
There's a question from Mr. Ramesh Dabaru. Is manufacturing of a robot in-house or outsourced? Could you explain the costing of the manufacturing?
So, Ramesh, I'll take the question. I'm not going to go in detail because a lot of it has our cost-cutting strategy for in the next coming years. But some parts, the fabricated parts are currently in-house, while bought outs are bought directly, like motors or battery. We have some things in plan to reduce costs in the next 2 to 3 years. So we are not going to go more in detail for that.
Saurabh just wanted to check, company can make world's #1 robotic and automation company in the world.
I don't know if that is a statement or a question. It looks more like a statement to me.
So what is your outlook about
What is the question? I didn't hear that. What is that?
He has actually just mentioned a question or statement. It is also without the question mark sign. It is difficult, but then he just wanted to know. So we have those capabilities. So can we be a #1 world company in the robotics and automation?
In our sector, we can definitely look for that.
Of course, right? If we have, everybody has a dream to come first, right? So yes, of course, we have the capability. We can come. It is only see, we have made the product. I will say a very good product which customers are liking. From here to #1, it is only right partnership and correct partners everywhere, like financial partners, the dealers. So yes, if we execute it properly, yes, we can be there.
I'm taking the last question from Mr. Sayyed. He wanted to ask, could you could you please highlight our company's strongest and the weakest quarter?
Strongest is always the fourth quarter, weakest is always the first quarter.
No, that is not the answer. I have not understood the question only. So,
Could you highlight?
in the 20 years, that's what, Sayed, your question is, or what is that?
Could you highlight our company's strongest and weakest quarters? That's all.
Acha, okay. So this then that answer is right. The strongest is Q4 and the weakest is I don't know, Q1 or Q2, Murthy? Q2.
Q1 is the most weakest.
Historically,
from now, as we turned we changed that cyclic trend right now. So from next year onwards, Q1 also will be on the stronger side only, but the most strongest is Q4.
Yeah.
So if you allow me to take the last question, Mr. Ketan wanted to know what are our sustainable margins?
For us.
Sustainable margins, it's going forward.
Yeah, Murthy, you can take that.
Yeah, so going forward, the standalone, this year we did around, means last year we did around, at PAT level, we did around 4% margin. So we are targeting minimum 50% growth year-on-year basis. So it will be there. And then RAS, as we mentioned, the gross margin is around 40-50%. So definitely at the PAT level, we'll have a good margin somewhere at around 10 to 15%. Or more than that with the subscription model and all.
So there's one question coming from Tushar Khurana. If you permit, I can go ahead.
Yeah, please go ahead.
Yeah, Tushar, please go ahead.
So there are a lot of hands still raised. I think we can still take it, right?
We can take it. Okay, sir.
Yeah.
Tushar, please go ahead.
Yeah. So last question on the product mix that we have for these ongoing orders that we have. So just want to understand like how margins would look like given the product mix that we have currently, or how is it usually for us? Like, can margins also go south because of the product mix not in our favor? How does it work for all the segments that we operate in? A general question.
Margin improvement will be there, Tushar, on console level, since we have high margins on this product-based business from tomorrow.
And then for this financial year, do you expect our margins to be good enough given the product mix that we have?
Guidance.
Well, Tushar, we actually not able to hear you clearly.
Is it better now? Is it better now?
Yeah, much better.
Yes. I'm asking, so given our current product mix that we have for our ongoing orders, is it good enough for us to have good margins given the cost measures that we are taking?
Yes, it is. We have.
Okay. Thank you so much, sir. Thank you.
So there is a one funny question which I just read. Raj has asked कि शेयर का ऊपर जाएगा. राज मुझे भी बताना शेयर का ऊपर जाएगा.
Okay. Just Pawan
Yeah,
Kumar
Raj has
wanted
asked.
to, yes, Pawan Kumar wanted to know, are we going to have the Concall on each quarter or how it is going to be?
Yes, we will have earning calls on each quarter. We will have.
So it won't be random like we had last time, right? We had the last call in December and then I was kept on waiting.
No, now we will have post this Q3. The next call we
First,
will have a next
okay.
update.
Okay, great. Thank you. Do we have any revenue guidance for FY27?
At parent level, the growth momentum will be there. As we mentioned, there is a steady growth will be there. And you can see 27 will have exponential growth from Humro.
So
Okay.
the next question is, what is Humro team size in
Size in the
USA?
US.
It is 7 people as of now. Then there is a question from X Shah. Can we have a plant visit? Yes, anytime you can come to the plant.
Pre-intimation,
Coordinate with,
Pre-intimation, obviously.
pre-intimation, just inform us prior with an advance period. We will have
yeah, you need to coordinate with Murthy.
it.
I believe that
So
was, yeah, that was the
Arya
next question.
Yeah,
is
hi.
again
Yeah, Arya
next
Shah
question.
had
Yeah,
some.
hi. Actually, I just wanted to clarify my questions answer. So we have 7 million booked from the POCs, right? Apart from POCs in US right now. You told me. And 4 million, we have an option to do it directly or from the dealer. So 11 million, or can you like correct me if I'm wrong?
No. What is the question?
So the question
11
was,
million order.
like how many proof of concept Humro robots are there in US, and how many clients have them, and any orders we have got, like we have converted.
So how many robots there are in US? So ask one by one question, Arya, so I can answer.
So in US, we have around 26 robots. He's asking how much POCs we did. So we have answered that.
I'm asking, we have,
1 minute.
you told, okay, can I say? Yeah.
Yeah.
So you told me 30 robots, out of which 6 to 7 we have used already for the POCs, right? And rest,
Yeah, we have POCs. Yeah.
and 2 companies
So
completed the
POC,
POCs.
Arya, okay, I'll tell you what is. We go there, we show, and then take the same robot to other customers. So we rotate those.
Okay. Yeah,
So
and then
out
you
of
told,
30 robots, the inventory, we are using 5 to 6 for POC. Yeah.
okay, and the order book we got, like that we converted this year, you told me 7 million, and 4 million it's still pending, right?
No, not 7 million, not 7 million, Baba. 3 million we had got from a dealer, and then now we have got half, what was that? 3 crore, na, Murthy?
Yeah, 3.8, 3.8.
3.8 crores. That we will route through the same dealer. So that we have got directly 3.8 crores. That we will route through this. If the payment terms, we agree with the payment terms. So it is 3 million. The order is 3
Okay.
million.
Okay.
So Darshan wanted to know what is our capacity and how much robots can we manufacture at our plant?
I think that is answered.
So I think we have already answered, but still let me answer. Close to 300 robots we can manufacture. So it depends on model mix, but yeah, average we can say 300.
And we are providing the maintenance for these robots also.
Yes, so we have a AMC and software AMC both revenue.
I believe all the question has been taken up. In case there are any further questions, yes, the last question from the is asked, what are the tariff impacts about the US?
To us.
So tariff impact is there. We have said close to $9,000, out of which 5,000 we are taking and 4,000 we have passed on to customer.
About the market investor, sir had already mentioned in his opening remarks. So any other questions we have? Do we have any further questions? When we close the pre-round of FPA.
Hi, can I ask a question?
Yes.
Yeah, sure.
Yeah, I just put the question in the chat box. So I'm saying without giving guidance, can you please explain how we'll have a J curve in terms of 20 FY27 numbers, as you've been explaining that 27 will have a J curve kind of a growth. So can you just explain how we will have without giving any numbers?
Okay, so so how the order acquisition happens in US, I'll tell you. First, you need to approach them, and such big customers, to approach them itself takes 2 to 3 months, which we have done, right? Then is the second thing is you have to do a POC, which again takes 2 to 3 months. So that also has been done with a lot of big customers. Then they will give a small pilot order, which is a paid order, of course. Pilot order is if they have like 100 warehouses or 500 warehouses, so they will give 2 warehouses to you, and 2 warehouses, and if they require 50 robots in each of the warehouse, and if they have 100 robots in 2 warehouses, for example, so they will give 6 robots or 7 robots in one warehouse and 7, 8 robots in another warehouse. So it's a pilot order, small order in the restricted area, and they will see how the integration of their softwares, or how the robots function, how is the productivity and stuff like that, right? So at the moment, we are all doing small orders with multiple customers. We have crossed all that, right? We have got approval. We have our POCs were successful. They have got a small order. So these the same customers are going to give you the big orders, after this. So that is how we are expecting the bigger J curve, if that satisfies.
Yeah, thank you so much. Thank you.
Thanks. Yeah, Pawan still has a question.
No, I'm good, Milinji. Thank you.
Ajaz has a question. Some people are putting in chat, some people are raising hands, so I'm just getting confused.
I just had one question, if I may, sir.
Yeah, please.
So it was more of a request. I just wanted if you could make the presentation a more detailed so that we could understand the business dynamics in a much better manner, because a lot of things are unsaid. I really got an opportunity to attend this call, so I'm thankful for that. But if the presentation was more detailed, it could have given us a better framework of the entire business.
Like what, Pratik? What information you want?
Yeah. So first of all, the revenue bifurcation, segmental bifurcation. Then what we want is that how does your product probably compete in terms of global peers, and where do you stand with respect to that? Also, a number of robots shipped, like quarterly basis or on a half yearly basis, how many robots have been shipped, and how much are under production, and what is the timeline for the entire process to get let's say you start making the robot from day one, then how much time does it require for the entire fleet to get completed, and what are the batch sizes? A basic or probably just release a document which explains the business dynamics. So
Pratik, you are from which company?
We are from Vruksha Capital Research.
Okay, so can we have a workshop? Probably you can coordinate with Murthy, and either you can have a workshop next week, or then we are even planning to have a analyst in-person meet sometime next 10 to 15 days. So probably at that time we can meet, and we can have in detail.
Absolutely. I'll just drop a mail to Sir.
Sure.
Thank you.
Thanks.
Yes, and again the question: how does our product fare against the competition, and
We've answered that as well.
both in terms of the price and the performance?
Yeah, the analyst meet we are planning to keep in Mumbai, so more analysts come in person. Yeah. So our product against the competition. So all the 3 sectors differently. So welding automation, we hold around 35 to 40% in our C type of category welding, and B type of category we might be around 10 to 15%. A, we are 0. We are trying to enter that type of welding competition. Cost wise, we are very we stick by our name, affordable robotics. So we are affordable. Car parking, we are, having around, say, 15% market, 10 to 15% market. And there also we are very, very cost competitive. And as far as home row is concerned,
I think
We lost you for last 3-4 seconds.
so. In Homebrew, we are again cost competitive when it comes to our peers, but that is our most expensive product.
So Manish, we lost you in last 3-4 seconds.
yeah. So I said
Homebrew.
in Humro, we are almost 15 to 20% cheaper than our nearest Chinese competitor.
So,
Yeah, and one question from Mr. Azaz. Now that we have figured out the technology, are we also looking at the consumer side
So who is looking after consumer side?
robots? So Azaz, you wanted to clarify more on your question?
No, so if you are asking whether we want to increase our product portfolio, the answer is no. We will be focused only on these products, and we will never go in B2C. We will always be B2B.
Okay. Do we have any further questions? What is the outstanding receivable currently, Murthy ji?
Yeah, so we declared around 48 crores was there.
So Raj, if lease to own, yeah, the
This is already accessible.
software is always the perpetual license. It is never, one cannot buy the software license. So it is lifelong perpetual license.
Okay, so I think there are no further questions, so we can end the call. So I request Milinji to give your closing comments.
Guys, thanks a lot for coming and supporting us. And I understand we are small and slightly we have to organize much more. So Murthy, please ensure, and the PR agency, please ensure that we have this earning call after every result, so that this is the second time investors have reminded us, and we should do this meticulously. So that is one takeaway for me. I will definitely ensure that either I have to put my PR and my CFO's KRA link to that now, so we have to get it done, so that is the one takeaway. I promise we will do that.
and I think we have lost Milind sir again.
Yes.
So with that, I would just like to thank everyone for attending. From AREPL side, I'm Rahul, and this is Murthy. Thank you for joining us.
And still, if you have any question, please write it to at cs@arpl.co.in. With this, I thank all the participants and ladies and gentlemen for attending this call. With this, I thank every participant from the management too, and I request to close the call. Thank you everybody for your participation.
Thanks, guys. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.